back to India, and I go back to your note, and you say that most funds are overweight India and appear comfortable with their current holdings on a 2 to 3 year basis. So you don't really anticipate significant churning of portfolios unless we see things change dramatically on the global front, which could then impact India?
No, I think so. I think that people basically, they're overweight position. They're very comfortable with that. They'd like to hold on for that some time. Maybe on the margin, they sell a little bit in order to go somewhere else. As we said earlier on, they might fund a position they want to buy, for example, in Korea or China for that particular matter. Yeah. But really going underweight on India, I don't see that happening too quickly. I think across the region, India still has the prospect of being one of the better, interesting growth economies or growth markets out there. And that's what we'll do.
How much of a concern is this FII MAT taxation issue as far as foreign investors are concerned? Do you believe that, once again, the fears have been exaggerated, or do you believe that this has been used as a tactical opportunity to sort of see the market correct and find good points of entry?
I think you're in the right corner there. It seems it's quite unclear what exactly is going to happen, and we know that some fund managers who receive letters are taking this now to court. I don't think there's going to be a clear-cut situation anytime soon.
Is that going to significantly continue to weigh on sentiment?
No, I don't think so. I think people, if they still want to buy India, they will still come in. Unless we suddenly find that the rules of the game change and people still have to pay taxes on previous holdings. But I think the issue is at this particular point in time so unclear and an early stage of, how would I say, deliberation, or maybe some people have just brought this to court, from what I understand, that it might take quite some time until we have real clearance of that. So I wouldn't really look at that as
a significant cause for concern.
No, what I would be looking for is not a turnaround in the taxes, although it would probably be helpful to the market, but really that CAPEX cycle to come back on. That's the real key issue for India at the moment.
You know, linked to the CAPEX cycle is, of course, this government's reform agenda and reform initiative. Just about a year in office for the Modi government, and there's been a lot of talk and a lot of promise in terms of what this government intends to do, whether it's subsidy control or it's the infrastructure push. What is the reform that you believe has been the most significant that the government has taken so far?
I think they've actually done a couple of things. I believe, in my own view, the most significant, but probably also one of the most difficult ones, is simply land reform. And it allows you to speed up infrastructure, but do that also in a very equitable way, so that farmers who live on that land don't get disadvantaged disproportionately so. So I think land reform and these kind of issues are very important, but also extremely difficult to get through. Another issue I would say in general is that it seems that India is on a path of willingness to open up, to get investors in, to address some of the bottlenecks I mentioned earlier on. Maybe infrastructure is one of them. Also the speed at which you can get things through to court and things like that. And in that regard, just moving in that direction is already a big step forward. So.
Okay.
Sometimes it's the willingness itself to reform, which is maybe the most important thing.
Well, speaking of the willingness to reform, and a lot of the reforms or a lot of corporate earnings will be linked to the pace of growth and the pace of reforms as well. You talked about a CAPEX recovery only in the second half of this year, at least that is your hope at this point in time. What about a pickup as far as corporate earnings are concerned? Because we haven't really seen the change in the economy reflect to corporate earnings just yet.
That's right. So that's why I said we're between hope and reality. Yeah. Last year was clearly hope. A new president comes in, we're moving into a new direction. Everybody's quite happy about this, or at least a lot of people are quite happy about this. The market were euphoric on this. And now we're in that stage whereby we need to see this translate, and that doesn't go very quickly. We look at markets, you and I, every day, but these things take months, quarters, years to translate into hard numbers and employment and profits. So we're in that grey area at the moment in between, and hopefully by the second half of this year we're gonna see this coming through.
So corporate earnings revival as well in the second half of the year?
Potentially, yes. Yeah. Hopefully we're at this particular point in time in a kind of the weakest point, literally in between that hope and reality.
We're at the weakest point today, you think?
I'm not quite sure, but I hope so. Yes.
Okay.
I mean, the numbers are a bit weak at the moment, so I'm not completely surprised by it. Although I'd say that the lower oil prices, I thought, would have a better impact on earnings. But yeah, if that CapEx cycle recovers, then maybe we'll see that spread through a lot of the other companies as well in terms of earnings.
You said that GDP growth is not necessarily the only factor when it comes to the equity markets and the way that investors look at equity markets. But at this point in time, given the pace of recovery in India, what is your best case estimate? The official number is 8% plus that the government has held out. What do you believe that we could see finally on
GDP
growth? Yes.
Well, first of all, I think sometimes we're very much obsessed by exact numbers, which is not really actually important. Look at China, the market is performing well, it has performed well, although GDP is actually weakened. So the relationship between equities and GDP growth is very often a negative one. So we're very obsessed about strong growth, but in certain cases, when GDP growth is very weak, we actually see markets performing better. For me, it's actually not important what exactly the numbers is. I think our economists are hoping to something like 7.5% over the next, I think it's by the end of 2016, that we'll gradually move into that kind of growth level again. What's for me important is simply the ROE, the return on equity for these Indian corporates. And economic growth is one variable in that particular process to get there, that sales growth. But they can build on their margins, become leaner, they can use their balance sheets much more cleverly, they can use the assets which they have a little bit cleverly. If they do that, then you can actually see an improvement in ROEs coming through as well. And in India, that's not really visible yet, but there's an opportunity to improve those. And that really, I think, is the key driver. We talk about GDP growth and CapEx, but ultimately, return on equity, ROE is the key.
So on that parameter, on the return on equity parameter, going back to the sectoral performance and what you believe is likely to deliver on that parameter, what looks good to you?
So this comes back to, I think, the ROE improvement in some of the cyclical sectors. If we get that economic recovery coming through and people have cut their margin, have improved their margins a bit and they're clever in using their balance sheets and the ROEs do improve, that will be most visible in the cyclical sectors.
Sectors like auto, for instance,
I think
specific?
Exactly. I think autos, I think hopefully in the banks eventually as well.
Private or public sector banks or just private sector banks?
In general, we like the private sector banks better because of the asset quality issues in the
public sector banks.
Exactly. The autos, construction companies as well, but a lot of them have run and actually performed already quite well. So that's why the valuations are maybe a little bit more lofty in my own view. And maybe parts of consumer discretionary, I would say as well.
Pharma, auto, the traditional defensive plays?
I think for pharma and some of the other sectors, it's one an exchange rate gain and a little bit of in terms of market share gains they make in either Europe or the US. I do think over the longer run, those are really interesting sectors to look at, given that that's where India clearly is globally competitive and globally a leader in certain industries. But when it comes to a near-term domestic recovery, I would go for construction, I'd go maybe for autos and things like that.
So, what is the target that you have as far as the year end is concerned for the Indian markets, given that you believe that people who are overweight on India will continue to be overweight India and perhaps use the corrections to even buy into the market?
Yeah. Now, in general, I would say for Asian markets, I don't see that much upside throughout the year. So I think by the end of the year...
So no repeat of 2014, clearly?
No. I think we're going to see, in general, for the whole of Asia, maybe a couple of percentage points up from where we were at the beginning of the year. But India should in that pace do a little bit better. So I'd say maybe we get 5-6% upside. Now we've actually come down a bit this year. So maybe we can do 7 or 8%, almost 10%, close to 10% from current levels or so.
By the end of the year?
Maybe by the end of the year, assuming
that everything falls into place as we just...
Assuming that all these things fall into place.
Yes. Before I let you go, Harold, we talked about Asia, we talked about global growth. India is trying to position itself, or at least one part of India is trying to position itself as an international financial center. We've had the government review the tax norms, ease of doing business for that specific financial economic zone. Do you believe that there will be takers?
Well, I believe there will be takers in that regard. it depends on what you actually expect to come out of it. About 10 or 15 years ago, I lived in Taipei, and Taipei was talking about becoming a financial center as well at a particular point in time. And they had reason to do so. Tech markets were booming in that time. Taiwan performed very, very well. But if you then step back and say, what is really a competitive advantage of Taipei or Taiwan? I think it lies in other areas. Not necessarily in financial center. Hong Kong and Shanghai will probably have a much bigger competitive advantage in that. I think for Mumbai, though, there's maybe a case to be made that it could somewhat succeed. It's a large market, will be a large economy, a deep market already for emerging market standards, quite diverse. So those things are quite positive. There's a large pool of people who could work there, and it could maybe play a role in that part of the world. In that Middle East is not so far away. So in that sense, there's a couple of boxes they can tick.
That can be ticked.
Yeah, I hope they succeed in that, yes.
Harold, it's been a pleasure speaking with you. Thank you very much for speaking to us on the Asian Tigers.
Good. Thank you.
Well, with that, it's time for us to wrap up the Asian Tigers for this week. Till then, from the entire team, goodbye. Many thanks for watching.